JSE All Share in negative territory today, down 1.4%. We're around 28,148 points. No surprise there, given the fact that Asian markets also starting to lose momentum. We are starting to see negativity coming through, and it seems that most investors are bracing themselves for a perhaps softer GDP number out of the US later in today's session. And we know that the GDP number was around 2.7% for the first quarter. We are expecting growth of around 2.5%. Do you think that it's mostly been priced in, or do you think that most investors are quite skeptical about the growth prospects for the US economy?
Eleni, I think investors who have had the opportunity in the last couple of days, and we saw that especially in MTN this morning, we see a lot of profit taking, closing of positions. If you're in the green, you're taking your profits before the weekend, and also just ahead of those numbers with the expectation. I think a lot of it is probably priced in. We saw those good numbers from the housing section, so possibly there is a small expectation that number will be good, but investors not willing to really get in, put their foot in the water and see and test that, Eleni.
Well, Yolanda, just looking at the resource space, we are in negative territory. This dragging Anglo-American down around 2%, but Anglo-American came out with some great numbers today. We saw headline earnings at around $1.84, and that's from 91 cents in the same time last year. Apart from that, resumption of the dividends at 25 US cents. Give us an indication of your thoughts when it comes to this company, given the fact that, they have come out with the dividends. It was largely expected, but we didn't know at what level it was going to be.
I think it's very positive for Anglo. They have been doing good things with their business. They've cut costs, they've sold their assets. The fact that the dividend is above consensus is very positive for the share price. It's only just a pity that it's come on a down day. I think we're going to see, just in terms of the diversified miners, that Anglo is definitely going to outperform. When you look at the detail, they are definitely turning around the business, and they're looking to be debt-free by 2011. Eleni, so very positive for the share. And if one looks, if the data out this afternoon is very positive in terms of GDP growth, we could see Anglo's possibly go all the way up to 300 Rand today. But we'll have to see how those numbers come out.
Well, it's interesting also just looking at Anglo when it comes to its Minas Rio project in Brazil. Also a bit of tension coming through, and the company does say that it is going to deal with that adequately, because we were expecting to see production start in around 2012, and that has been delayed.
And you see that they have come out in their statement this morning to say that they're possibly looking at selling that asset. So very positive for them. They're definitely making their business lean and mean. So I don't think investors should take that on a negative note. I think obviously they'll give us more detail in the long term as to how they're going to finally deal with it. But very positive for Anglo. They've realized that there is a problem in that business, and they're going to be dealing with it adequately, Eleni.
Investor came out with its interim management statement today, showing that net operating profit increased by 11%, and it's really about its UK asset management and capital divisions that have been boosting the company, while looking at the Australian and South African operations, those creating a little bit of a dampener.
I think here the company is definitely a strong, solid business. Obviously, if you look at the numbers, we see the attributable earnings numbers coming off, and that really means that they are still pushing ahead with their depositor strategy, which means that they're coming under pressure in terms of them on their margin side. So a little bit negative for the share price, but in the long term, still a good solid business, and we recommend that one buys into weakness.
Taking a look at ABSA, a company that came out with a trading update today. Headline earnings per share for the first half expected to be down by as much as 5%, citing the fact that credit demand is still relatively soft, but at least bad debts are looking slightly better. Of course, we're seeing the massive difference between the retail side of banking and, of course, investments as well. How do you see that playing out for ABSA?
Helene, when we look at ABSA has got in terms of the banks, the largest exposure in terms of the retail space, and that's obviously in their numbers. I think their numbers really were a surprise, but I think it's going to be the biggest surprise in terms of disappointments for our local banks, and I don't think the rest of our banks are going to come under in terms of such large earnings pressure disappointment. So I think it's probably scared investors in terms of the banking sector, but I think it's going to just be a surprise. It was really a surprise to us.
Yolanda, looking at the rand, of course, it's been relatively strong over the last couple of trading sessions. A lot of speculation coming to the fore, a lot of flows coming into the rand as well. But interesting to note that volumes have been relatively depressed in comparison to the previous month. So this perhaps exacerbating the moves on the local currency. But one thing that is going to definitely be in focus today is the trade balance. We know it's volatile. What are you expecting?
Nedbank is expecting that we're going to be in a 2 billion deficit, purely on the fluctuating oil price, as well as, so in real terms, what we're expecting is that our imports are going to exceed our exports. So possibly, like I said, very difficult to predict, but we are expecting a larger deficit.